Ladies and gentlemen, my name is Greg McCloskey from ForexLive.com. This is a technical look at the dollar versus yen as we head into the new week, head out of the current week. So we're talking about the week starting July 4th, U.S. holiday. Today we had a Canada holiday, Canada Day. So combination of holidays, of national holidays here in North America, keeping the activity fairly subdued, as you can see. Over the New York session, lots of sideways action here. That sideways action came off of a high that we saw overnight that peaked right against the 200-hour moving average. That's a green line in the chart. Market sellers came in against that level and forced the market down to the 200-hour moving average. That's a blue line in the chart. We did hold that level again yesterday as well, and moved above it here on Wednesday and pretty much stayed above it until the last few hours of trading, where we dipped a little bit below as weekend sellers kind of pushed the price to the downside. Nevertheless, the bias is a little bit more bearish here. We couldn't get above to or above the previous highs through here. This is a pre-Brexit lows here at around the 103.54 level, 54 and 57 respectively. We fell below that level on Brexit Friday, and since that time, as I mentioned, we've been below at the high price today at 103.38 was the best that we could do. And so there's a little bit more of a downward bias here, although admittedly we are kind of moving sideways here since the big day on last Friday, with a little bit of an up, a little bit of down, a little bit of up, a little bit of down. May have reached that peak right there. So in trading next week, what are we going to look for? Well, let's watch around the 102.15 or so level. That's our last swing low through here. If we're able to stay above that level, that would be a little bit more positive for this pair. But we do have to, if we're going higher, we need to get above the 100-hour moving average. And so if we can't do that, if let's say we find sellers in here early next week, and we can't through this 102.15 level, there's a chance we head down to the 101.66 level. That's our 38.2 of the move up from the Brexit low to the high. The 101.13 level is a 50% retracement. Above that, we have this low coming in at 101.38. That was our low price after the move to the upside, correction move to the downside, and then break to the upside. Overall, for the week, the week's trading range was just shy of 200 pips. That's the fourth lowest trading range for a week's time this year. So non-trending type of week. Maybe the trading between the goalposts here is indicative of a market that doesn't know which way it wants to go, looking for direction, looking for a break, looking for a run. Watch those moving averages. Watch the 102.15 level on the downside. On the top side, watch the 103.54 if we start to move back higher, back above that 100-hour moving average, and are able to get above that 200-hour moving average, that green line in the chart right here. All right, so that's about does it. My name is Greg McCloskey. Good fortune to trade in. Have a great weekend. Bye-bye now.